Hi, everybody. Keith Myers here. I just wanted to get a presentation out here. We're getting a lot of questions from folks on Social Security decisions. I wanted to do a little presentation here, just a short one, to discuss some of those issues that we're helping, the questions that we're helping answer, and at least give you some things to think about before you make that financial decision. Let me just share my screen here so that we can take a look together. So obviously we have a lot of people that we are helping answer these questions. Each decision is personal. So obviously, this is not a broad blanket for everybody on what they should do with Social Security. You have to know your personal situation, but at least hopefully we'll give you some ideas to help make that decision. One of the things that we're really asking is, when should I take it? Some people think they should take it as early as 62 because it might not be there tomorrow. Some people are kind of waiting till their full retirement age, and then obviously you can take it as late as age 70. So when should you take it? Why should you take it at that certain age? Let's dive into that a little bit. One of the things that I really want to make sure everybody understands, that by you claiming, it doesn't just affect you and your Social Security, it also affects your spouse and when they will get or what they will get for their benefit, either now or when you pass away. So one of the things that a lot of people don't know is, if you were to pass away, so I'll use my situation as an example. My Social Security right now, my benefit is considered higher than my wife's. If I were to die and say we're 70 years old, she would receive the higher of the two benefits. And in that case, she would receive mine for the rest of her life. Now, I know that doesn't seem like a big deal, but when you're an 85-year-old widow, $200 a month or even $1,000 a month might be a big deal. So those are some things that you should really consider. Things to think about: when is your full retirement age and the benefit calculation there? How much is that future benefit, whether taking it early or taking it after your full retirement age? Obviously, how long do you expect retirement to last? What's your family history? What's your personal health history? What are those things that we have to really consider, not just for you, but for your spouse? Whether or not you continue to plan on working. If you continue to working, how does that affect your Social Security benefits? And then where are you going to get your other sources of income for retirement? Are you going to work part-time? Do you have a pension? Do you have other savings that you can draw from during retirement? Taxes, how Social Security can affect your taxes, or at least how your income affects Social Security. And then again, how your spouse might be affected. Here's the table for your full retirement age and when you can receive benefits. You can see if you were born between 43 and 54, your full retirement age is age 66. Each year between age 50, or if you're born between 1955 and 1960, that full retirement age goes up by a couple of months. So if you're born in 1957, that full retirement age is 66 and 6 months. They calculate your benefit using the 35 highest years of earnings. I know a lot of pensions out there that take your high 5, that people sometimes think that's what Social Security is. It is actually your highest 35 years. So when you get your Social Security statement, you can actually, there's a ledger there that shows you your earnings in each year. So if you have a lot of zeros there that count as your high 35, that is going to affect that earnings calculation over time. So when should you take it? You can claim your benefits as early as age 62. Now, each year that you take it before full retirement age, or each month that you take it before full retirement age, you're actually reduced a benefit. So in this example, if your full retirement age is age 67 and your benefit would be $2,000, it would be $1,400 at age 62. Now that is a permanent reduction in your benefit. Okay, so you don't get a higher amount at age 67 other than your cost of living adjustment. That's a permanent reduction in your benefits. So you can see you'll receive between 25% and 30% less at age 62 than at your full retirement age, again, depending on what age that full retirement age is. Obviously, your benefits are received for a longer period of time. You get that monthly amount for those 5 years, but it does reduce it for the rest of your life. So a lot of times we talk about break-even point. Again, to maybe pile on to what I said earlier, remember that also affects your survivor benefit. So not only would you receive that reduced amount, but if your spouse eventually gets your amount because you pass away, he or she will also receive that reduced amount. Now, another thing is if you're still working at age 67 and you don't need the income, you can get delayed credits up till age 70. So if I say I work till 70, I don't need the income, my wife maybe has a family history of longevity in her family, I might determine and decide to delay my Social Security and wait till age 70 to receive it. In that case, I get about an 8% increase for each year that I wait past full retirement age, which 8% is a pretty good bump in income, especially if you're thinking about a 20 or more year retirement. And especially if you're thinking about a surviving spouse, the difference between $2,500 in this case and $2,000 a month is substantial if that's your income in retirement and your sole income in retirement. So if you go from age 62 in this example, if you go from age 62 to age 67 to age 70, your benefit at age 70 is actually 77% more than what you would take at age 62. Now, I always tell people that if you need it for income, certainly Social Security is a good place to get income and consistent income. But if you don't necessarily need it for income, we really need to look at maximizing that amount for you and for your spouse. So in this case, those cumulative benefits from age 62 to 70 are $135,000. So you look at your break-even point, usually around age 80. Now, how long does retirement last? For most people, according to Social Security, and this is from January of 2020, 1 in 3 retirees will live to at least age 90, and 1 in 7 will live till age 95. So a standard traditional break-even point on one person's life isn't the calculation that we need to look at. We need to look at not only for your life, but also if your surviving spouse will receive a higher benefit if you pass away, also for his or her life. Another thing that you should consider is, are you planning on continuing to work? So if you're under full retirement age and continue to work, if you make more than about $18,000 a year, which we'll get to in the next slide, you will actually be penalized for Social Security for making too much money. It'll reduce your benefit. If you've reached full retirement age, it will not reduce your benefit if you're over that $18,000 number, but your benefits might be taxable, which again, we'll get to here in a minute. So again, if you're before full retirement age, and again, that table was earlier in the slide presentation, you will be reduced, your benefits will be reduced for $1 for every $2 that you make in excess of $18,240. So using round numbers, say I'm making $20,240, that's $2,000 extra, I will be reduced $1,000 in my Social Security benefits. Again, a simple example. Once I reach my full retirement age, if I'm still working, if I make more than $48,600, I will be reduced $1 for every $3 that I make over the annual limit. And then at or after my full retirement age, so once the year after I've turned 67, my earnings will not affect my benefit. They will be affected prior to that or in the year in which I reach full retirement age, but not after that. So the next question is, where is your income going to come from? Like I mentioned before, if you need the Social Security income to survive, it's there for you, right? I mean, that's kind of a no-brainer. But what other sources do you have to maybe maximize the amount of Social Security that you're going to get? Is it savings and investments? Have you been a good saver over time? Are you going to work part-time or full-time? And we need to consider that. And obviously, for a lot of employees, they might still have access to pension benefits, whether that be through the state, county government, maybe teachers' retirement, or your private company getting pension benefits from them. Even if you're making or retired and you have been a good saver, your Social Security still might be taxable. So if you are married filing jointly making more than $32,000, up to 50% of that benefit might be subject to tax. Now, the way they calculate that is they take your adjusted gross income plus your non-taxable income, which could be like municipal bonds, plus half of your Social Security benefit. If it equals more than $32,000, 50% of your benefits might be subject to tax. If it's more than $44,000, if you're married filing jointly, up to 85% may be subject to tax. Again, subject to tax doesn't mean 85% tax, but 85% of those benefits are going to be included in your taxes. You don't have to pay your taxes on them. So if you're in a 20% tax bracket using simple numbers, on every $1,000, $850 would be subject to tax. That would leave about $170 that you'd pay in tax on that benefit, as an example. Like I've already mentioned, this decision really, it doesn't just affect you, it also affects your spouse. So how do you maximize your household and your survivor income? Obviously, the appropriate combination of claiming ages is important, right? You could claim at one age and your spouse could claim at a different age. You don't have to claim at the same time. So your retirement benefits are based on your earnings record. At full retirement age, you're entitled to that 100% of your full retirement benefit. As we've already talked about, if you take it prior to full retirement age, you could be reduced. If you extend it to age 70, you could get an increase. Now, I want you to understand is that you can claim at any month between age 62 and 70. Social Security is going to calculate what your benefit would be in that given month. Your spousal benefits are based on your earnings record, okay? So if I made more than twice as much, or my benefit's more than twice as much as my spouse's, she might be able to claim up to 50% of mine. So let's say my benefit was $2,000, her benefit was $500. Once I claim, she might be able to get $1,000 instead of the $500. If she claims benefits, her spousal benefit might also be reduced. So survivor benefits, in my case, I've already used that example. My wife, her benefit is less than mine. If I were to pass away, she would receive the greater of her benefit or my benefit. In this case, she would basically, in essence, get my benefit if I were to pass away. If she were to pass away prior to me, I lose her benefit and I continue to get my benefit on a monthly basis. If you are a widow, you might have access to benefits as early as age 60. If that is the case, certainly that is something to consider. There are some other options that you have there. and you should consult with somebody, a professional, on those options. We've already kind of got into the power of delaying benefits. So in this case, we see spouse 1 and spouse 2, what their benefits are at age 62, age 67, and age 70. And then we see their monthly joint income between the two. So again, if you're working and you have other income or other sources to use, and you expect to live a long retirement, and your family history says that's the case, and your personal health history says that's the case, that difference between age 62 and age 70 can mean a lot of money over time. In this case, about $2,400 a month, but obviously over a period of years could be substantial. The other thing to consider is if your spouse, if you pass away before your spouse, or in this case, spouse 1 passes away before spouse 2, they would receive the higher of the two benefits. There's a restricted application strategy that is kind of no longer available unless you were born before 1954. I'm not going to go in depth on this. If you were born before 1954, just know that it's available and that we can certainly consult on that. But I'm not going to go in depth just because most people that are taking Social Security today might not fall into that category. But it does allow you to collect your spousal benefit and then later switch back over to your benefit. So the choice is really yours. If you need Social Security income, you might claim earlier. If you want to invest your monthly benefit because you don't need it for income, that's a consideration. I would say this, rarely do you get an 8% increase guaranteed in your investments. So, you know, it might not be in your best interest to take that early if you're just going to invest it. If you have an IRA or 401k and you want to delay taking funds from those, it might be in your best interest to claim earlier. Or if your spouse is going to delay their benefit. So in my case, maybe my wife takes it at age 62 and I wait and take mine at age 70. Why you might want to claim it later: you want to maximize your monthly retirement. You want to maximize survivor income. I've hit on that plenty. You want to work longer. Okay, you're going to make more than the $18,000 a year, and you want to continue to do what you're doing because you enjoy it. Or you're able to file for your spousal benefit and then switch to your own benefit later, the restricted application. Again, kind of a nuance now, but if you're born before 1954, we should talk about it. So one of the things that I recommend everybody does is go to the Social Security website, if you haven't already, and sign up for an online account. That online account allows you to see your statement, to see your benefits, and to look at what else is out there. By registering on that website, it also stops somebody else from registering on it for you and trying to be fraudulent. So I recommend anybody go out there and do that. You'll want to make sure that you and your spouse are in the room when you do that, because there are some questions on that that they reference your credit score. So you want to make sure that you know the answers to those 3 questions to be able to access it. I also recommend people talk to Social Security Administration. They usually have really good answers to your questions as long as you know the questions to ask. So they're a great resource and are able to help you through some things. You can apply online, which I think right now with COVID, that's what they're doing. But in normal circumstances, you can go in person also. So again, this is a short video, maybe just to get some ideas in your head about if you should file early or wait. Hopefully you took some value in it, took a couple of ideas that might help you. If you have questions, feel free to reach out. We are here to answer those and help you navigate not only Social Security, but retirement in general.